So first of all, welcome and opportunity. This has been a bit of a process here. We're at the culmination of a white paper that has been produced and has been presented to most of you. If you've not received that, reach out and we will make sure that gets sent to you. Comhar Partners is a national retained executive search firm and some international affiliations as well. We are very strong, spend a good deal of our time and devote time and energy to the private equity world. We are a leading firm in that, 6 offices around the country, 25-person team, and ranked amongst one of the leading firms doing work in the private equity community, principally with the portfolio companies of these private equity firms. Today we have 3 participants from and ultimately from other firms that have been clients or are strong relationships of ours. We'll introduce them shortly, but I thought I would turn this over to Paul very quickly to talk a little bit about this being the net result of a survey process and a white paper we produced. Paul?
Thank you, Bernie. Yes, I'm Paul Herrerias. I'm a managing director of Comhar Partners and in the San Francisco office. And because of the decade of work that we've done with the private equity industry, we've really gotten to work closely with them on their investment thesis, strategy, execution with the portfolio companies that they acquire to help them achieve the ultimate objectives. And we wanted to get an idea of the state of the industry, especially in this year, 2020, with all of its distractions, if you will, and also find out what are some of the impediments for growth, what are some of the strategies that are being used and implemented and working for people in the industry, and talk about the talent in the portfolio companies. How is it working? What's changing? What are some of the challenges there? And ultimately provide insights that could allow leaders in any private equity firm to be more successful going forward and achieve their objectives. And that was kind of the main thrust of our being trusted advisors to the PE community and providing with more detail to be successful. Thank you, Bernie.
Absolutely. So I think what we should do is kind of delve in here. We have 3 panelists today and appreciate their active participation. We have Sam Snyder, Suzanne Yoon, and where are you? There you are, Gary Stark. Welcome. Appreciate all of your participation. Their bios, I think, were presented as a part of the introduction and offer to attend, so I won't dwell on that a whole lot. We're thrilled to have all 3 involved, and thank you very much. So why don't we kind of get an opportunity to just make a brief introduction of each. Suzanne, would you like to just start off and give us a minute or 2 of your background and focus, please?
Suzanne Yoon, I'm the founder and managing partner of Kinzie Capital Partners. We're focused on mid-market companies in the consumer manufactured products, and then business services spaces, and primarily focused on acquiring companies that are sub 15 million or so in EBITDA. And I've had the pleasure of actually working with Jim O'Malley, who is, I think, on the phone, which is one of your partners, right, Bernard? So.
Correct. A critical partner. So thank you. Sam Snyder, please, brief introduction.
Sure, thanks, Bernard. So I'm Sam, I'm a partner at Greyrock Capital Group. We're a junior capital focused private equity fund, currently investing out of our 5th fund. It's a $280 million fund, and we focus primarily on lower middle market companies. We're a generalist. Like Suzanne, we do like consumer, but it's just a sub-segment of our generalist approach. I spend my time focusing on businesses kind of 2 to 5, 2 to 6 million of EBITDA, and we're looking to invest all or a majority of the equity, as well as the sub-debt, or in some cases, just all the third-party capital required for the deal. We're not an operations-oriented private equity firm, so we generally partner with independent sponsors, operating partners, that type for these types of smaller deals. That's half our business. The other half is just traditional mezzanine backing larger private equity sponsors. I've had the pleasure to work with Paul Herrerias numerous times. He's done very well for us recruiting executives at some of our portfolio companies, and I'm sure we'll talk about some more stories with Paul later today.
Thank you, Sam.
Thank you, Sam. Last but not least, and a lengthy history with Gary Stark. Gary, please introduce.
Sure. Again, Gary Stark, Iron Range Capital. I have been on the principal investing side for around 20 years, most recently founding Iron Range Capital, which is a call it lower middle market independent sponsor model, whereby I raise my capital from on a deal by deal basis, and as such, I'm fairly opportunistic in both size and industry sector. But looking at opportunities where I have some kind of an angle, whether that's prior experience in the sector or great operating partners and the like. And as Bernie mentioned, we go back a ways. I guess we've done a number of assignments, both here at Comhar recently and other stops along the way. So glad to be a part of the panel.
Thank you very much. Let me just delve right in here and ask you each to make a brief comment about, and the overlay here is the effect of COVID-19, the pandemic, and how it affects the industry. Suzanne, we'll start with you again. Please, some brief comments of just state of the industry at this point.
I think just right now, I think what I'm hearing is, deal flow obviously was very quiet over the summer. I think on a relative basis, although people closed deals, we closed a deal at the end of the summer on August 31st, but a deal that we had been working on prior to COVID. Deal flow has started to pick up. I think we've seen that across the board. And then obviously, one of the things that drives a lot of, need for capital, as well as just how the public companies and how the public markets are doing, which are very well. So there's just need to diversify capital investment. So there is a lot of capital out there, despite the issues surrounding the pandemic. And I think the M&A market has really started to pick up again, looking into first and second quarter. I think the election is behind us. People are feeling much better about, at least knowing and having some sense of what the future holds. And then obviously the vaccine has been, the announcement of the vaccine has been a huge push, I think, into people thinking again more about growth, and if not growth, getting back to normal, normal state. So I think all really positive momentum for us.
Great positive update. So I'll switch it up, Gary, please. Your state of the industry here.
Yeah, I would say I would echo those comments. I mean, I feel like, back in the early innings of this in March and April, there was a very consistent storyline, which was, a lot of deals that were in process were put on hold. Capital partners were triaging portfolio companies, trying to figure out what all this means. And, through the summer, a lot of companies, some numbers started to stabilize. A lot of companies, all of my companies, accessed the PPP program, as I know many did. And I would say that, now having, worked through that, the deal flow is starting to pick back up. And as much, I think capital across the spectrum, banks through equity, are interested in, getting back to it, especially, in light of some of the vaccine news and the light at the end of the tunnel. But it sort of has been very, it's been a very volatile curve from sort of March to today, I think, but starting to get back to normal is my take.
Thank you very much. Sam, please. Yeah, I think Suzanne and Gary covered it pretty well. I guess piggybacking on some topics they brought up, if you put aside hospitality and aerospace, I think, and you kind of cover up all the news headlines of the year, from a numbers standpoint, I think it'll end up looking like a fairly normal year, which is just a very bizarre aspect of this. Now that kind of looks through all the challenges that came up with the government subsidy programs, just the state shutdowns, the summer, that late winter, summer time was very tough, very trying. But where we are now, everyone's kind of gotten comfortable to some degree with the constraints COVID creates on diligence and deal flow and closing deals and just all of those big aspects of the business. But it is going to end up having looked like not that much of a down year. Whether it's fundraising, whether it's portfolio marks, whether it's number of mandates with search firms, and I'm sure you guys track that. It has that very odd element to it, and I think that's all buttressed by partly kind of the and maybe it's an American thing, maybe it's just our economy thing of looking through, just having that confidence to look through COVID, and now you have a vaccine there, as Suzanne mentioned, that has given people more confidence. But if you're an industry that doesn't have a multi-year kind of consensus of being hurt, like those two sectors I mentioned, the industry's kind of looked through these challenges. That may not end up being right. We don't know. But
if I can jump
today,
in.
Yeah.
Yeah, no, exactly. I'll add a third industry that has been hit in addition to the two you mentioned, the aerospace and hospitality, and that is the energy industry. They have not bounced back yet, but in a lot of ways, it is looking like a very positive year. Now, when we did the survey, we asked people about their strategy. How did the pandemic affect their investment thesis and their strategies? Were they changing their strategies? Were they changing directions for the firm? And in general, the respondents to the private equity survey said, stay the course. Yes, we panicked a little bit, we triaged a little bit, but in the final analysis, we decided that staying the course was the best option, with some tweaks to see how can we adjust to COVID-19, which industries and companies will benefit or could benefit from it. And maybe we have to delay our exits. Those are the two main shifts, but in general, it was staying the course. How does that jive with your experience? What do you think is the right way to respond to what we've seen? And Suzanne, do you want to try that first?
Sure. I actually think, obviously, it depends on the industry and the type of company, but I think for the most part, which we have seen, right, that the expectation when the pandemic hit was that it was a short-term, that it was going to be a short-term issue, right? And we probably had to make adjustments in terms of the way we execute. And I think crisis management is not new for very seasoned executives and board members and private equity firms. And so we're constantly adjusting, I think, the way that we have to execute. But from a strategy standpoint, unless there was a long-term, real long-term effect, like I think aerospace and hospitality, there may be longer-term effects on those industries. So I think you have to reconsider. But generally, I think, and this goes back to, I think it was Sam's comment about where the industry, if you look at all these companies, where they're really ending up, and it looks pretty normal if you look back through 2020 outside of certain industries. I think that's because people did kind of stay the course and just change kind of how they're doing things, and adjusting to their human capital needs, and also these short-term shutdowns that we've had.
Yeah, no, good point. Sam, did you want to comment on that as well?
Sure. So from an overarching strategy, investment theses, executive recruiting and talent assessment, it is a stay the course. This isn't certainly the first pandemic, not the first crisis, not the first economic cycle. And that playbook applies, not all the way, but it applies. Our strategy change that we have to contemplate on a deal-by-deal basis is very acute, and even is a piece of executive searches. It's the in-person element that has always been considered a critical part of assessing a new hire, assessing a business, walking the plant, that part of the diligence process. And you're forced to be more creative there because there are constraints, actually having that access. And I don't have a great answer for the audience because for us, it's very deal specific. We've closed deals and made hires without ever seeing them in person. We've also done the opposite where it looks like a normal time because we were close to the business or just for whatever reason had that access. So it's been very acute in that specific issue.
It's fascinating that you mentioned that too, because that's one of the biggest changes that we've experienced in the executive search world. Putting deals together, CFOs, presidents, COOs, and they've never met the rest of the team in person. It's phenomenal. My 30 years of executive search, I've never seen that before, but it is one of those changes that we've adapted to. Speaking of changes, what are some of the impediments for growth going forward? We've gone through a lot this year. We've got more challenges ahead of us, but what are some of the impediments for you as a fund manager to growing your fund or to growing your portfolio companies?
Gary, you want to weigh in on that one?
Yeah, sure. And I don't know if it's, if anything's changed due to COVID as far as, and I know the results from your survey had, competition for deals, and that's what it was, and that's what it is. Maybe the surprising piece of it is, I felt like when we were going into January and February, it's been a seller market for, however long period of time. And the deals that were still trying to navigate a process during the starting innings of COVID, and certainly some of the things I looked at through the summer, despite some of the banks pulling back temporarily, despite the falling knife and how do you value some of these, and really before people had figured out PPP and it was going to be this free money that everybody was going to treat as an add back, so that you could get to the end of this year and almost get, as Sam and others have mentioned, sort of a normal year almost. I didn't see a lot of change in the heady seller market. At least I didn't. I mean, I was sort of surprised some of the IOIs I was still submitting in the summer and not being invited to a virtual presentation, and when you factor in all these dynamics around the deal and not being able to meet the management team, potentially, on and on, I really thought that I would be hearing or seeing a bit less on the multiple side, but at least my evidence was I was bidding low in anticipation of that and not getting invited. So to me, the competition for deals and deal flow is going to be right back there. And especially, now we're going to look towards 2021. And if other than some of these segments everybody's talked about here today, you start to see the kind of growth that obviously the market is anticipating next year. I don't know what's changed. It was a seller market and it's a seller market. And there's, as Suzanne mentioned, there's a lot of capital still sitting out there, and if anything, there was a little bit of a lack of deployment for a short period. So to me, it's that.
I think if I take it kind of from the portfolio company standpoint, I think that probably, and also from our own personal standpoint, is that I think that the lack of like human touch and the ability to meet in person and have that kind of like face-to-face interaction and understand each other's cultures has been limiting. Although I think Zoom and being able to at least see see people, and we're all kind of, I think, adjusting to virtual meetings and diligence more. It's also true for on the fund side where fundraising, right? So if we're a lot of fund managers have had a very difficult time this year if they're new to the market and didn't have prior relationships. So I think this is a time where we're seeing is if you have strong relationships, the growth is still there. If you don't have strong relations, very hard to start new ones. And I look at my portfolio companies and where they have done well, the ones that have done well are because they've been taking more market share from their existing customers, not creating new new relationships. So I think that that's really been an impediment, and I think will continue to be if, the markets, we're just not able to open up and travel and meet with each other again.
Yeah, I think that just to layer onto that, I've got a portfolio company that has the housing tailwinds at its back. If you follow, the housing is really robust right now, but they sell a very engineered product, and it's a very close knit kind of relationship, and you really need to go to the facility and see the layout to design the solution. And for the time being, a lot of customers are just saying, no offense, with COVID, we just don't have people coming to the plant these days, and we're just not as open to meetings. And that, unfortunately for them, is not a Zoom solution. We could certainly quote and try, but I think that is a great point in terms of impediment for the next 6 months potentially is getting some of that face-to-face interaction going, customer to vendor kind of situation.
With us sort of evolving out of this, the question will be, does this put more pressure to do more deals, and particularly look critically at the management teams that are currently running the portfolio companies in play, as well as a more critical look of talent in new acquisitions? Any comments on sort of the talent challenges that we face? Suzanne, you want to weigh in on that one? Sam, you're on deck.
So I actually think talent challenges are ongoing. I do think something unique that we've had, to deal with, and we're now questioning, right, is a manager or a C-level executive's ability to manage remotely even more without face-to-face interaction, and how they are dealing with mid-level managers, and how the mid-level managers, I think it's just a different, it's something new. And I wouldn't say it's new, because I think we've been dealing with it for a while, but it's certainly come more to the forefront on, traits and key traits, and, trying to get in someone's, inside someone's head around how they are able to continue to keep an organization going, if their entire, their C-suite is all remote and working from home, and how willing people are, right, to sacrifice if they have plants and they have to be on the plant floor, with their staff, and there's just, I think, different elements to it. I think generally, my take on being a private equity investor is it's always about the management teams, like taking a critical look at the management teams, the culture fits, is always critical. I think it is certainly heightened now, because the ability to bring in somebody new in the middle of a remote working environment is very challenging. Whereas prior, I think when we're closing, we thought, well, we can always hire someone. Not always, right? Not at a CEO. I don't particularly like changing out CEOs, but I think about 100%, most of our deals, we've had to replace the CFO, just because of the stage of company. And so that is also something I think more worried about, in terms of making a change right away versus knowing, can we make some of the changes and execute the investment thesis that we need in the first 100 days, right? Like start a 100-day plan with the CFO we have in place, if we were to close the deal in the next month or two, as an example.
Yeah, excellent. Sam, you have some comments on talent challenges going forward here for the private equity community?
Yeah, we've had two instances of a particular challenge I think will sustain itself at least till COVID runs its course. And one of these was with a Paul Herrerias mandate that we just successfully got someone in the chair. But when you are C-level search, CEO, COO type search, if you're after talent, it wouldn't be unusual that they're gainfully employed at a very good gig, right? I mean, that's part and parcel with hiring talent. It's not always the case, but in this particular instance, I'll use the one with Paul as an example. It was a niche industry, relatively niche industry. well-defined talent pool, but these are generally longer tenured positions, family-held businesses, mostly private, and you're competing of pulling someone from that environment that may be more annuity-like, they've been there forever, may not quite have the equity upside because it's a closely held business. So your promise is you're going to get in a more dynamic environment, have equity upside, but maybe there's a cash trade-off. Maybe it's just the uncertainty of going into, what they may think of as, sharper elbowed or tougher private equity environment or something like that. Motivating someone to leave a relatively cush stable gig in this environment, it's always hard. I think it's significantly harder in this environment. It makes sense. And it's been a pain point for us twice in two really important searches. I'm sure it'll happen again.
Yeah. Yeah, our experience, and I'm going to flip to Gary here in just a second, but our experience has been the searches are taking a little bit longer now. The reticence due to concerns about potentially a relocation, or how do we really assess the fit of the situation when it's all done through remote. I'm going to pivot to Gary here, and we'll talk a little bit about culture and how difficult it is to assess and determine culture. We've just worked on a deal for CEO of one of his portfolio companies, and the first person he physically met was the day he started the job. He was interviewing all remote, and all the interviews with board members and everything were remote. How do you calibrate for culture in a situation like that? Gary, comments on that?
Well, I'd say, yeah, difficult, right? I mean, you try to get a feel for, I think we did some Zoom and we did some conference calls, and you do your reference checks and you try to probe around. Not that you wouldn't be doing that anyway, but you're relying a bit heavier than spending some, face-to-face time. What can you do? Our situation was one where unfortunately the incumbent CEO was departing, and we had to make a move. And Bernie and the team did a good job, because I think, as you just mentioned, it's tremendously challenging environment to be recruiting at this time. At that time, that was back in the spring, and so would I recommend doing it this way? No, but we did the best that we could, between references and getting a feel. But somebody mentioned it. I mean, boy, you couldn't even have, you might form your opinion, but the culture and the fit with the team is always a big part. I always say there's sort of 3 buckets to the culture, right? I mean, we're going to work together as owners, partners, whatever you want to call it. And then there's the culture within the company, and then the culture maybe within the industry and your customers, and how's that all going to fit? Because trust me, you can have some disconnect there. But one way that it holds together is by meeting the other team members. And here, first day at sort of, hey, we announced that we were having a new CEO come in by Zoom, and his first day in town, sort of shows up with his trailer at the facility and meets the team. Now, often you're dealing with that dynamic potentially due to confidentiality issues, but just sign of the time that we were dealing with then. So, you do the best that you can. That's what we did.
Yeah, and integrating that individual into that environment and keeping the team cohesive, we have found that requires a much higher sort of EQ or emotional maturity, that they're very self-aware, that they have an outgoing enough personality to command the respect and kind of fill the room, even if it's done virtually. So it's
well, and maybe one thing I didn't mention was, you have your wish list, right, for a candidate. This industry experience, this overall experience, this company size experience. In this particular case, I think what we did was we leaned a bit heavier on his capital equipment manufacturing experience, because that's what we are, as a capital equipment manufacturer. Because of all those dynamics, where in a different situation where you were able to meet with the person and meet with the team and some of these other things, maybe you could have been lighter on that and heavier on some other things. But here, I think that's how we bridge it a little bit too. So, you pick which factors maybe are going to be more important to you.
And we find collectively, you private equity folks don't seem to buy companies in big money center downtown cities. You tend to buy them in remote places, like in this case, Chattanooga, Tennessee. So we've got people to go to interesting locations, right? Right. So Sam, comments on all of this in terms of culture and how you integrate that in these current times.
Yeah, I can speak to culture with respect of a new hire, or culture with respect to the company and how it led them to handle COVID. Which do you think would be more useful?
Well, I think in hiring, I mean, there's a focus now, and we think we'll come out of this into the new year with quite a bit of a boom on hiring agendas. So how do you match that culture, figuring we're going to be spending still for some time, more time working this way?
Yeah, and it's a really good question. Where I spend the most time is on CEO and CFO searches. The latter, our approach is we're solving for more discrete skills, cultures apart. I would call it secondary to the blocking and tackling, and just that piece of the CFO or the controllers, fit in terms of capabilities, not so much culture. But there we've been willing to do it all virtually, and it's totally to tell if we've been successful, I guess. On the CEO side, and Paul's was a part of one of these, one I mentioned recently. In some cases we've benefited where the candidate was local enough, you didn't have to cross the flight bridge, and you're able to get in front of the employees and kind of not have that element. We haven't yet had a case where, from a CEO standpoint, it was fully virtual. I think that would be a real struggle for us, because culturally, it's I really agree with how Gary kind of put the buckets out there. If we haven't been forced to cross that bridge yet, but I'm not sure we would, unless really forced to, because it's so critical that there's cohesion with the employees, and these are small businesses, so the leader has an even more outsized importance, and we just can't. It's so much more painful to get it wrong. We'd rather grind it out for 6 more months now at this point, and maybe even not have a CEO and have some interim solution than take that risk.
Interesting. Suzanne, please, comments on all this.
Sure. So I think we think about culture throughout our whole process. So even as soon as we close, I think we do a pre-close assessment of what the company's culture is or might be, and then have the company itself go through their own culture, exercises to define their culture. And I think we always start there. And then we've had actually a few hires through COVID. None of them have to date been fully remote. So we have started, interviews remotely, but probably wouldn't have made offers until there were some, meetings, but not at the CEO or CFO level. These are, VP of sales, head of HR. So we've had those types of hires. So I do think it's very difficult, but one thing I find actually really useful is third-party assessments. We have third-party assessments done on all of our executive management teams and our boards, actually, and then we assess any executive that we're bringing on as a parallel to the fit against the rest of the executive team, and we use various third-party assessments. But I find that's really where we can see a lot of whether or not it makes sense. And they generally tend to be very accurate because they're people who have been doing this for a really long time, and they use a lot of science and data behind it, and do a much better job than something I could, that I would be able to do in an hour interview.
Yeah.
So.
One thing I'd add, Susan, you bring up a good point on the third-party assessments, and we're definitely frequent users of those. I'd put in that category, if you have a trusted relationship with the search firm. And Paul, I'll keep singing your praises here. We've had very good experiences with Paul. When you know that their stage gating and evaluation is not just aligned with yours, but an actual substantive part of the process. When we've worked with Paul, he's got his notes per candidate, his profiles, and kind of ranking, and it plays that role a bit, and it can help close that gap. So kudos to you.
Yeah, super helpful. I'll pass off to Paul here, but I'll make one comment, which is we're heavy believers in that at Comhar, and use Hogan and Myers-Briggs and so on. And then we scorecard every candidate that we present on to you folks with our detailed notes. So we feel it's essential to be able to get as close as you can to the ideal fit. And then that culture overlay, which is always hard to quantify, has to be kind of ephemeral a little bit. But Paul, follow-on questions?
Thank you. A lot of good points there. And thank you very much. I'm glad, Suzanne, you brought up the assessments as well. The third-party assessments can be very valuable tools, and they're meant to be used as insights or questioning, and always to be used in the onboarding process. So another thing that we are kind of committed to and passionate about is getting people started properly, and to the point where we're hiring onboarding coaches to help with our placements now and offering that for our clients. So, and encouraging them to take advantage of those assessments as well as part of the process. So we try to see ourselves as get the right people on the bus and give them the best chance possible to be successful. Because when you're looking to change out one of these leadership positions, there's usually a pain point. There's something in mind. And in our survey, we ask people, what keeps you up at night? What are you thinking about in terms of the company? And how are you responding when it comes to changing the leadership in the organization? And we notice a correlation when people say, well, we're concerned about the financial results of the company. It often was the #1 reason that they changed the CFO. Or we're worried about competition in the marketplace, and they changed out the COOs in situations like that. Or we were worried about, are we going in the right direction with the company in the industry today? Do we have the right strategies at play? Do we have, everybody's commitment to that? It was a CEO search that was their big change. So there's a correlation between the pain point and the position. If they were worried about employee retention or recruitment, the CHRO was the #1 position that they changed out, for example. And thinking about those correlations, and you mentioned, for example, Suzanne, that the CFO was the most common position you changed out. And we'll talk more about the CFO role in a minute. But have you noticed any other correlations between what's going on in your mind and what role gets replaced in the company?
So I'll just start with why I say the CFO, but I think it's because of the nature of the size of the companies that we're investing in. There's usually some type of generational shift happening, and we're always, most of the time, we're the first time institutional capital in, if not the second time institutional capital. So it's a pivotal time, right, when we're investing in, either because of growth or because somebody's exiting. And most founders, so we've purchased, our last 2 acquisitions were from founders who had started the companies. And most founders really, if they've started it from scratch and now they're at, the 100 million plus revenue range, and they're probably salespeople, and they have been managing to a bottom line and not to gross margin. That's something probably that we see very commonly. And if they haven't gotten, and maybe they've brought in a friend or someone that they know to manage the books, and so there just isn't a level of sophistication there. So just by nature, with the requirements of a fund and private equity and the reporting requirements that we have of our companies, it's just almost virtually impossible, I think, for someone who is homegrown or came from a small company to really be able to keep up with that level of expectation. So that's really, I think that just starts with that why the CFO generally for us is kind of always most of the time, we're changing that position. And then it's about the growth, and you started to touch on this, Paul, and where the strategy is going and who we need to drive the execution of that strategy. And we usually do that in line with the CEO and make sure that we are aligned even prior to close on, where, at least conceptually, where we want the company to go. And I think ultimately, I think no one would disagree that that can't happen. The growth and execution cannot be done by computers. It's people, right? And you have to have the right people in place. So the human capital components are so important to executing that. So that's really always where we start, is with the investment thesis, and then looking at where the key investments are. Is always going to start with people, and then, you know, to the capital expenditures probably next.
Yeah, I think on the survey, in fact, we had something like 68% of the searches that PE firms did were for the CFO and 48% for the CEO. And then below that was the CIO, head of sales, and head of HR following it. So it kind of ratifies what you just said. Yeah. Sam, any other thoughts, or Gary, when you are thinking about a company, what are some of the key positions that you think of turning over, and why? Besides the CEO and the CFO.
Go ahead, Gary.
Sam, you want to? Well, I think it's kind of been covered. I mean, you know, I think you got to back up, and usually for most of us, it's you know, management is a big factor of your level of interest in doing the original deal. And as Suzanne mentioned, the same for me. Most of my deals are owner founder or founder's son kind of situations, or daughter, you know. And you know, and occasionally you're looking at something where you're saying, hey, I've got a person out of an industry sector here that could really go scale this business from 50 to 250, and we'll find a way to have that person either take over initially or over time. Otherwise, you know, I think when it comes to the CEO quote unquote spot, you're kind of getting your head around how that's going to work out upon doing the deal. And I would say that most of the other positions end up being, you know, replaceable of sorts, either because they, you know, going in, and it's very common, as she mentioned, with the the quote unquote finance and accounting people, because they just get outstripped by capability and demands from needy private equity investors like us, and having banks and everybody else. But you know, I think the rest, yes, you might, you know, you might be looking at, you know, the next sensitive area would be, you know, the sales side, and do the relationships, are they with that individual, or are they with the company? So you're assessing that though before you do the deal. If that person were to leave, is he going to walk out with our revenue generation ability? You know, but other than that, I sort of feel like, you know, they're all recruitable of sorts, and they're all, you go in knowing you may have to change, because people, you know, do move around. They go to other places. You try to incent and align and retain, but people leave. You know, so I don't know that I have, you know, much else than that. Other than the founder CEO, you know, you're kind of figuring that out before you do the deal, that he probably gets us there for 2 years, and we'll move him over to a board role, or maybe he'll be solely focused on what he loves, which was engineering the equipment or business development or whatnot, and we'll bring somebody in that'll make his 30% equity stake worth a lot. And we've had those conversations going in, and, you know, there's not a lot of surprises. Sometimes, unfortunately, performance warrants otherwise, but, you know, that's not what you're expecting going in, I think. Otherwise, you might be taking a pass on the deal.
Right.
I'd add one thing, Paul, just because I think it's really interesting and crosses over with your previous category of culture, is I don't have a great stat off the top of my head, but historically, I believe most private equity deals are from sponsor to sponsor. So they may have at one point been owner entrepreneur led, but they've gone through, you know, that transition with the sponsor, and then they're trading hands again. And so in one instance, we had a business that was that dynamic. And the crossover with culture is that you listed all these reasons to change an executive. We had a real cultural issue with the company. It wasn't going to be fixed by the CEO, it wasn't going to be fixed by the CFO, the COO, the HR, head of HR. It was all of them, and they all had to go. I'm generalizing, but this was the conclusion. And you know, it certainly had financial performance issues and other things, but it was culture. And so it wasn't something, it had to be fixed kind of en masse. And you think about it as an executive search firm, that's a great mandate. And it was in the for-profit education industry. And we had a specific firm we used in that instance. But it was so critical and it was a hard decision to make. But it's something where if it is cultural, if they've been there numerous years, if they've already been through sponsor ownership and it's that deep, it's going to be something more dramatic than just your leader, because it's functional as well at that point. And, you almost need, if you can, a full reset, especially if you've got, in this case, we knew the industry well. We had a sponsor like Gary who was very successful track record in that industry. And it just ended up being much more variables there. But just another
Right.
case study for you.
Yeah,
Right down, you need to have enough transition roles that you create a tipping point for the culture and make it known that this is an objective for the new people, is to establish a new culture, and sometimes work with a outside coach as well, organizational development coach who knows how to facilitate culture change in organizations.
For the record, we did spend $25,000 on a coach to save that situation, and we did not get the return that we were desiring.
You got to start with the right people. That's certainly something that we found.
I had a question with regards to the survey, actually, and I'm sorry I didn't bring this up before, but when I was looking at, do you also look for, or have you seen like board searches as well? I just didn't see that on the list because we're talking about CEO, CFO, but even like third party, non-executive chairs or.
Yeah, the board practice for us is a huge part of what we do. We were trying to focus a little bit around the internal management culture and dynamics in the theme of the survey, but we are finding stronger fiscal and stronger risk management profiles becoming pretty essential in the board pursuits of late. That at the end of the day, the risk management profile, particularly as a lot of these companies are looking at e-commerce channels and cyber risk and a whole bunch of other things like that, is really have an influence.
Yeah, I just wanted to add that on top of the CFO and C-level executives, we do spend quite a bit of time curating our boards and making sure that we have outside board members that are accretive, to our strategic plans. So
yeah, no, it's true. We have been tasked with those assignments, to go get somebody with real industry expertise, credibility, people that can help reinforce the right culture in the organization for success. It's nice to have a board that has people on it who can really reinforce for the organization. And that relationship between the board, the CEO, CFO, and the head of sales frequently is a special relationship as well. And we've seen instances recently where companies have said, hey, we need to work on that relationship, and try to find a good coach to work between the board and the executive leadership team. The other comment on boards that might be timely too, the state of California had mandated a couple of years ago that we would get more diversity on boards, on public boards. And now the state of California's requirement that we get more diversity on boards is becoming a big headline. A lot of people are talking, how are we going to do that? So that's another big.
NASDAQ is requiring it. Melody Thompson was named the first Black woman to ever, today, right, chair a public company board.
Congratulations. Yeah. And NASDAQ came out recently and said that 75% of their boards are not prepared to meet the requirements for diversity and gender and sexual and racial diversity that they're looking for. And NASDAQ may follow with that, and other countries, companies around the country may follow that as well. So these are hot topics. The other topic that's been hot in the boardroom recently is COVID-19, pandemic, quarantines, work from home, isolation.
Yes.
We're seeing mental health issues throughout the organization. And as we get into the holidays, they're anticipating it's going to get even worse. So we're looking for a lot of ways to support the executive teams and the whole companies. And this is a topic a lot of boards are working on. So boards, busy agendas right now.
Well, let us wrap up here. Our survey really had 5 themes in terms of our ultimate recommendations. Focused on growth, but staying close to home. looking beyond EBITDA and looking to the cohesion and the leadership team, other elements beyond both the margin and the EBITDA. Don't change the core strategy. A lot of firms are sticking to their knitting, but maybe delaying exits is an important theme that came out of our survey. Putting culture first, which we've spent a good deal of time talking about here, and then remaining and getting more proactive about talent and key talent into the organizations. Are we missing any particular key things that we should be making sure are takeaways from this session that maybe the survey might have missed? Suzanne, any quick comments on that as we wrap up?
I think the only real, and I think Paul brought it up, really some of the board issues that are coming up. You know, we talked about this briefly in our prep session, but it'll be interesting to see how corporate, you know, companies and boardrooms deal with mental health issues going forward, because it's certainly come to the forefront. And given all of our companies, the success of those companies are dependent on our people. And how our human capital is managed, right? From that standpoint, it's going to be, I think, very interesting. And the types of things that people are doing, I think we're all very interested. I know all of my CEOs are very interested in what each other are doing and what other CEOs are doing, really to kind of maintain culture and identify mental health issues as soon as possible within their teams. So.
Great insight. Sam?
Yeah, I'd actually add to Suzanne's point on diversity. I think you need to make a distinction between public mandates and the private sector, because you know companies are much more closely held under private equity ownership or private ownership, but they still have boards, and the same goal to enhance diversity applies. But it can't, because of that dynamic, it doesn't come from the company. It comes from the private equity firms themselves. And you know, having to look, or VC firms is probably more in the public, just because those seem to be sexier things to talk about than private equity. But you know, it needs to come from the firms themselves, and you know, firms need to start finding ways to add different perspectives and diversify, because that will make its way into the board. Because in most businesses, all or most board members are from the firms themselves.
By the way, I don't know why VC is so much sexier than private equity, but I just wanted to note that to the public eye, because
yeah, but you agree, right? Like all these board comments talk about VC companies, but you're like, you realize there are like thousands more private equity owned businesses out there.
You mean that actually have cash flow?
Yeah, exactly.
That too. Yeah.
Gary, any quick comments about this?
No, I don't think so. I mean, I think, there's sort of there was the COVID theme that weaves into all of this. And I guess companies are going to have a lot to think about, boards and management teams and the like, in terms of, the whiplash from COVID, because, everybody's talking about working from home and Zoom and this and that. But yet you talk about culture, and I don't know what culture develops, from that, and what kind of creativity is lost, and people have mentioned mental health and all these other things. And so I think it'll be interesting to see how things either change or don't change over the next few years, and what has longer term, change. I don't have those answers. I just know that, there's just there's a lot going on. And then you got, the underlying businesses and everything else. So,
Yep. Let me ask a side question that's been asked here. Two questions that have come up. The political environment is changing. The winds are moving in whatever direction, whatever you feel that is. I'm not going to put my hand on that grenade. But how do you feel? Jim O'Malley is partners in our firm. He and I did a podcast here recently, and that was the topic, which was, how are the political environment, the shifting environment, going to affect the private equity world? And we basically thought it was going to kind of tone down the rhetoric a little bit, that we were going to get a little bit more into a humanist sort of approach to things. Not that PE private equity leaders are generally great humanists, but ultimately it's going to lead to a little bit of a more humanist approach. Do you have any quick comments on that? go to Sam. Sam, any quick comments on that?
Yeah, I guess it'd be, with the regime change, I think there was more worry for our industry depending on, cabinet nominations and things. There have been some very explicit rhetoric, vilifying our industry, when probably a lot of that blame could be put on Amazon and others just kind of blowing up certain industries. But I agree with you. I think it's going to get back to a little bit more just a friendlier way of doing things, and we'll all just have to worry about taxes and the things we normally worry about. Get back to normal from that standpoint.
I think there will not be the extreme. I think there's extremes on either side, and from a business standpoint, our country in general, right? The GDP is what makes it run, and everyone knows that. Whether it's at you're a center. I think Biden is a very centrist Democrat, and I think given that the Senate looks like it's going to stay where it is, like I think the tax issues are not going to be who knows at this point, but as extreme as maybe some had feared prior, and so. I think we kind of, the good news is we all know at least who the president is going to be going forward. And I think the just uncertainty has gone away. And so we'll all adjust, because we do. As a country, we always have. And I think we'll continue to prosper. And there's so much pent up demand right now due to COVID. There will be new businesses and new growth, and we'll all have learned, I think, a lot of really, really good lessons coming out of this as leaders throughout the country, with whether it's small companies or either, from a political, hopefully our politicians have learned too. And, we get back to being a little more efficient.
Yeah.
Right. And that's really what the private equity industry has done for our country for years, has made us more efficient. I really appreciate your comments, Suzanne. Thank you.
One final question I have here is, as you look at CFOs or CEOs, this has come in here, how important is it, just kind of a quick reply, that they have prior private equity leadership experience, having come from a firm that understands the leveraged balance sheet or tight cash flow management, the impact of financial driven boards, those sorts of things. Gary, quick comment on that?
Yeah, I would say quickly, I could tell you we put that on our scorecard when we interview CEOs, VP sales, CFOs. We always have that on the scorecard. Would I say it's a top 3? No. But does it factor in? Yes, because I think it somebody that's been through that and understands, how we think, and the metric driven and results driven and the things you mentioned, Bernie. Yeah, we do consider it for sure.
Yeah.
Suzanne?
I agree with Gary. It's definitely a plus. It's not a deal breaker, but probably a strong plus.
Yeah. Sam, any quick comment there? We see it particularly in the CFO role. A little more so
and more in the CFO role. I'm not as worried about it, unfortunately, or as much in the CEO role, but the CFO role, it's definitely a very strong plus.
Yeah. Sam, any?
Yeah, I'd say it's similar. Just might put more of a preference or evaluate more if they've been in a leveraged environment for the CFO, because you might not get quite the same board reporting type background, but at least cash working its way through the company and managing appropriately, you could get there. On the CEO side, we're probably more flexible there.
Yeah. And then do you use, just kind of a quick comment because we're wrapping up, use interim as a solution for some of these roles for a time? Sam, you're on camera already. Any quick comment?
Yes, we are frequent users. It's an expensive, and it was very much an interim executives market leading up to COVID. And if you find a good one, it really can solve a pain point. And that's at both CEO and CFO roles.
Suzanne as well?
I think we're all nodding as Sam was saying that. So nodding at the expensive part and that we all use them.
Right.
Look, first of all, I want to say thank you very much to the three panelists for their discussion. I hope everyone found this to be fruitful. I wish to thank Paul and our team, and particularly Lindsay, who's on camera here, for having assembled and put a great deal of work into both the survey as well as this webinar. Thank you all very much. We wish you all the best and happy season and to a productive new year coming up. Thank you all very, very much.
Thank you for the white paper and survey. I thought it was really helpful. And for those of you who have not read it, I would take the time. It's definitely worth it.
Excellent.
Thank you. We look forward to next year's survey as well.
Yes. Thank you all very much.
Great. Thank
Thank
you.
you, everybody. Be well.